Welcome everyone. In this video, is Swftcoin about to break out? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the first structures that catches our eye is the pennant pattern that has been forming for some time. This pattern appears especially during a short-term consolidation phase, following a strong rally, and is often considered a strong technical signal that the trend will continue. This pennant pattern, which I discussed in detail in the previous video, is still valid, and is currently very close to the breakout phase. This marks a critical moment for traders to watch carefully. If we take a deeper look at the structure of the pattern, the trend lines forming the upper and lower boundaries of the pennant indicate that the price is stuck in a narrowing range. This kind of squeeze is a signal that the moment of decision is approaching, because at some point, after being stuck in this squeeze for a long time, the price sets its direction, and this direction is usually parallel to the main trend that preceded the pattern. So here, given the strong upward momentum preceding the pennant pattern, it is quite in line with the rules of technical analysis that the possible breakout should also be to the upside. If the breakout is to the upside, it means not only that a resistance level has been breached, but also that the market is psychologically ready for a new bullish wave. That's because pennant patterns are usually broken with volume and violent movements as the accumulated energy is released. This means that if the price breaks through the upper trend line on volume, we can expect to see a fairly significant price increase. Especially if this breakout is clearly confirmed on the hourly or 4-hourly timeframes, it could turn into a serious buying opportunity for short and medium-term traders. However, the fact that the price is now exactly at the upper boundary of the pennant is of great technical importance, because at this level, indecision may prevail in the market. Buyers may try to push the price higher, while sellers may want to prevent this breakout. But when the buyers dominate and the upper pennant band is clearly broken, especially if this breakout is supported by high volume, then the technical targets of the pattern come into play. Usually in pennant patterns, the post-breakout target is the length of the pre-form bullish breakout. That is, whatever the previous rise was, one can expect a further rise after the breakout. In addition, looking at the history of the area where this pennant pattern formed, we see that similar squeezes have been followed by sharp moves before. This reveals that the current technical structure gives stronger signals. In other words, the same potential remains valid now, just as this area has produced hard moves in the past. If the price leaves this pinch area to the upside, it could create a renewed sense of confidence among investors, which could lead to bigger buying waves. In conclusion, this pennant pattern has now reached the critical decision point. In case of a breakout, the projections offered by the technical structure are quite positive. Of course, technical analysis doesn't always offer certainty, but the current structure suggests that the market has favorable conditions to make a bounce. Therefore, it's worth keeping a close eye on price action in the short term, but we need to look not only at the pennant, but also at other metrics. Stay tuned. When we look more carefully at the current price movements within the framework of Elliott wave theory, it is possible to say that we are quite characteristically in a fourth wave pattern. This wave is usually a more horizontal and consolidation phase that follows the previous strong uptrend. Especially considering that the third wave is considered to be the strongest and steepest movement in the waves, such a period of rest and search for direction is quite natural and expected in terms of technical analysis. On the current chart, we can clearly see that the price is moving within a certain band range, with more limited pricing instead of sharp upward and downward movements. The main reason for this is the nature of the fourth wave structure. This is because it represents a period of time when both buyers and sellers are uncertain about the direction of the market. Profit realizations are taking place, and new positions are not yet fully in place. This sideways structure usually manifests itself as a triangle, a correction channel, or a complex combination, and traders are often tested for patience at this stage. The fourth wave can also be thought of as the market's period of rest, consolidation, and regrouping. During these periods, prices neither fall sharply nor rise sharply, but rather compress and move sideways. Technically, price movements during this period do not contain many sudden surprises, but this can be boring for traders. However, experienced traders and investors know that such tight structures are often a harbinger of big moves. This is because as the market tightens, it accumulates energy, which eventually manifests itself in the form of a directional breakout. Once the fourth wave in the Elliott wave structure is complete, the fifth wave is next in line, and this wave forms the last major leg of the current uptrend. The fifth wave is usually a phase in which previous peaks are tested, sometimes surpassed, and coincides with the most euphoric period of investor psychology. The fourth wave, which we are currently in, is the process of preparing the price for this final bounce. As such, it is a preliminary signal, with potentially high profit margins for those who are patient. Especially with the start of the fifth wave, resistance zones, which were the previous wave peaks, will be targeted. If these zones are broken on volume, prices may not only hit technical targets but also break above psychological limits. However, due to the nature of the fifth wave, it does not always have to be as strong as the third wave. In some cases, the fifth wave may remain shorter and weaker, so traders who will trade in this phase should determine their stop-loss strategies well and manage their positions carefully. To summarize, the current technical outlook points to a very clear fourth wave phase within the classic Elliott wave structure. In other words, prices are currently in a preparatory phase, and the market may soon complete this process and launch a new upward move. With the fifth wave, new highs can be tested, but you should know that this will require patience. One of the most important momentum indicators used in technical analysis, RSI, the Relative Strength Index, is an extremely valuable tool that not only gives us trading signals, but also shows us the deep dynamics of price movements. At the moment, there is a very clearly visible falling trend line in this indicator. This falling structure has been in line with the price action for a long time, almost as if it reflects the weak buying power in the market and the bulls under pressure. Although this falling trend line has been tested on the RSI from time to time, there has not yet been a breakout to the upside. This suggests that the market is still indecisive and buyers are not fully in control. However, with a careful eye, every time the RSI approaches this line, it makes higher lows than the previous contacts. This could be a positive technical signal, as rising bottom patterns usually indicate that a breakout is imminent, and momentum signals are getting stronger. If the RSI breaks this falling trend line to the upside on strong volume, this could not only be a pattern breakout on the indicator, but also a parallel shift in the price chart. Trend breakouts on indicators like the RSI usually cause the price to make a move in the same direction. So here, a downtrend break in RSI can set the stage for a similar downtrend break in price and the start of a larger uptrend. This is especially important for investor psychology, because a downtrend break on the RSI indicates that buyers are regaining their strength and selling pressure is weakening. At the same time, this is considered one of the turn signals in the market, especially if the RSI value rises above the 50 level after the breakout. This is technically a clear sign that the price is also moving out of the neutral zone and into the bull zone. Such a crossover usually signals the acceleration of buying waves and the start of a new trend. At this point, it's worth noting that this falling structure in the RSI is of great importance, not only for short-term traders, but also for traders with medium and long-term strategies. Because such breakouts usually come with the unwinding of price structures that have been under pressure for a long time. And if the RSI continues to accelerate upwards after the breakout, this could signal the start of a new uptrend in the bigger picture. It's also important to remember that the RSI is not just a tool for trading signals, but it also reveals the psychological forces and balance of momentum behind price movements. A downtrend breakout on the RSI actually indicates that traders are no longer indecisive and are starting to reach a consensus on direction. This supports one of the cornerstones of technical analysis: momentum gives direction. To summarize, this falling trend line on the RSI is an extremely critical structure. This technical boundary is so important that it can affect the fate of the price, and if it breaks to the upside, it indicates that the market will evolve in a completely different direction. This would not only be an indicator breakout, but also an indication of a change in investor psychology and market momentum. In such a situation, we are likely to see positive breakouts, resistance crosses, and new trend starts on the price charts. Therefore, it is very important to watch this downtrend in the RSI carefully and make good use of the breakout moment. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.